I don't know if you guys saw ProPublica leaked the tax payments of some of the wealthiest people in the United States, and they came up with something called the true tax rate, which they are evaluating over the change in net worth, which includes unrealized gains. This may not be something anybody cares about, but I do. I am interested in this stuff. So let's just jump in and listen. Okay, here we go.
Hi, David. I wanted to talk about financial literacy in the U.S. So there was recently a ProPublica article. I don't know if you saw it, and basically they came up with their version of a true tax rate.
Right.
And I think it was emblematic of something that's a problem not only on the right but also on the left, and that's there's just a complete lack of understanding on how basic tax rates or just anything to do with finance in general.
I'm with you so far.
In this country. And basically the true tax rate, they said, was that you had these billionaires like Bezos and Musk, and there were a couple others. I think Warren Buffett was one of them. And their true tax rate, as ProPublica said, was the amount they paid on income divided by the amount of wealth that they had gained.
Right.
So that's unrealized gains, and then also the amount of income that they had gained. So, you know, for some of these guys who like their portfolios went up because they were big stakeholders in their companies, and
sure.
Like Musk is a great example, right? Tesla skyrocketed. Their true tax rate was extremely low. It was in the single digits. But when you actually looked at their income, it was like 25 or 30%. And we can debate a wealth tax or something like that, but I think there's a growing issue on the left of people who don't understand basic economics. And as well as on the right, I think it's the exact same thing on the right when people hear, oh, Biden or Obama wants to raise your taxes, and they don't understand original tax rates, and they don't understand when the tax increases would actually kick in for higher income earners. So I just wanted to hear you.
Oh, guys, I'm sorry. We already have to. I can't believe we have to ban someone already for harassing Kate, and it's someone who's been banned under about 10 different names already. It's unbelievable what's happening here.
Your opinion on financial literacy in general.
Okay, so listen, this person is going on for 3 minutes. The question's really simple. First of all, the true tax rate that ProPublica came up with, yes, it's based on something that is not how we tax people. We tax people on realized gains. If your stock portfolio doubles, if you don't sell the stock, you don't pay taxes. There's no we pay taxes on realized gains. Fine. Now, what is there an exception to that? There is. Property taxes. There is something called your assessed value of a property. If you own a property and you buy it and it's worth $400,000, you are, and it's assessed at $400,000. You pay yearly property taxes on $400,000. If the value of the property goes up to $500,000 and the city reassesses it at $500,000, you immediately are paying more in taxes, even though you have not realized those gains. You've not sold it for $500,000. It's just been evaluated as being worth more in the market, and you pay more in taxes. That is with real estate. We don't have something like that for stocks and bonds. If people want that, then you've got to lobby for it. So I think that the ProPublica article was interesting, not because Warren Buffett's not doing anything wrong by not paying taxes on unrealized stock market gains. That's the way the system is designed. The illumination that we should have, as if we didn't know it, right, is the system favors those earning money from assets rather than earning money from labor. When you work and get paid, those are realized gains. You took your labor and you sold it and you got the money and now you pay taxes. When my Tesla stock doubled, tripled, quadrupled, whatever, I didn't pay any taxes on it until I panic sold half of it when Elon Musk smoked pot with Joe Rogan because I thought it was going to go downhill from there. When I then sold half of the stock, I paid taxes because I realized the gains. That's just the way things work. Okay. So if you want to change that, you have to change that reality. And there is misunderstanding about it. The true tax rate as described by ProPublica isn't a real thing. There is no such thing. It's just you pay taxes on wages and on realized gains, etc. Fine. So that's that. We've gotten that out of the way.